Silver has got a promotion, not by the market, but by the US government. It is now officially a critical mineral. On paper, that sounds like a compliment, but when a government suddenly takes an interest in your money, it is rarely for your benefit. For decades, silver has been the people's metal, global, decentralised, and freely traded. But now, Washington has decided it is critical. The irony is that the title could be the most dangerous compliment silver has ever received. Silver has acquired a new title. Not precious, not industrial, but critical. Washington has placed it on the United States official 2025 list of critical minerals, alongside copper, silicon, lead, and a handful of others. Now, lists rarely change the world. This one just might. It determines which commodities qualify for federal support, which may face tariffs under national security law, and which can draw public funding for exploration and stockpiling. It is the policy equivalent of an invitation to the inner circle. But as investors and analysts are cheering, there is a far more important question hanging in the air. What does this actually mean for silver? Now, the Federal Register notice that confirmed silver's inclusion was bureaucratic in its tone, but political in intent. The Department of the Interior described critical minerals as those essential to national security, economic stability, and supply chain resilience. Translation: materials the state believes it cannot safely depend on the rest of the world to provide. Silver, the notice explained, now qualifies under that logic. The metal is indispensable to modern infrastructure and vulnerable to supply disruption. The decision did not come from bullion enthusiasts. It came from the Geological Survey, applying a quantitative model of risk, trade, dependence, and concentration of production. Now, in Washington's eyes, silver has moved from decorative to defensive. Now, the timing here is not random, because this update coincides with the Section 232 investigation that will review processed critical minerals for potential tariffs on national security grounds. Section 232 allows the government to raise barriers to imports if it judges dependence to be a risk. By adding silver to the critical list, the administration has brought that into the scope of that review. Now, that does not mean tariffs tomorrow morning, but it does place silver under the microscope of trade policy. For a metal that already trades through fragile logistics, that shift matters. Now, the move also signals intent. The United States wants to onshore the extraction and refining of strategic commodities, accelerate domestic permitting, and reduce reliance on what it calls rival suppliers. The critical list acts as a compass for those efforts. So when a material enters it, federal agencies are allowed to direct funds, remove bureaucratic friction, and if they so wish, build stockpiles. Analysts at the Center for Strategic and International Studies call it a signal to the market about what the US government is prioritizing. In other words, the bureaucracy has drawn a circle around silver and written important. Now, the addition of silver to a policy list may seem abstract, but it alters the incentives of everyone from miners to bullion banks. When a metal becomes political, so does its flow. So what actually changes now that silver is critical? Well, there are 5 things, each pretty subtle, but they're cumulative. First, you've got permitting and capital. US projects that produce or process critical minerals can access faster permitting, coordinated agency review, and in some cases, federal funding. That does not mean the Treasury is going to shower money on silver miners, but it does reduce timeline risk, which is the variable that investors dislike the most. Time is money, and permitting is time. Second, you've got trade exposure. Inclusion brings silver within the range of national security tariffs. Whether those tariffs ever arrive is debatable, but the prospect itself distorts behavior because it encourages stockpiling inside the tariff zone and hesitation outside it. And this is why metal has been piling up elsewhere. Anticipation becomes self-fulfilling. Thirdly, the stockpiling authority, because once a commodity is classed as critical, agencies may justify building reserves. And in a market already contending with years of structural deficits, a new buyer with deep pockets could tighten supply further. Official stockpiles rarely trade daily, but their creation changes sentiment, and silver might gain a safety net and lose some freedom. Fourth, you've got market psychology, because a critical label changes perception. It invites investors who prefer assets with strategic narratives and discourages others wary of this kind of government involvement. The silver market, once left to speculators, solar engineers, now attracts national security commentators. And that shift in conversation, well, that brings its own kind of momentum. And fifth, well, it's all about data and transparency. A newly classified critical mineral becomes subject to reporting requirements. Agencies will demand clearer figures on production, trade, and inventories. Greater transparency, that's healthy, but it will also expose the plumbing of a market that often prefers discretion. And once Washington asks for data, it rarely stops asking. Now, all of that sounds consequential, but some argue that the new status is more symbolic than structural. The label may move headlines faster than it's perhaps moving silver molecules. Silver's price still depends on fundamentals: mine supply, recycling, industrial use, and investment demand. Those forces have been tightening for years. The designation merely aligns policy with reality. It acknowledges what the market already knew: modern life runs on silver. Now, on paper, the designation embeds silver in US strategic planning. In practice, it will influence the market mostly through perception and marginal incentives. If you see sustained backwardation between spot and futures, well, then you are watching the market still paying for immediacy. If lease rates remain high, liquidity is thin, and holders are cautious. If those measures normalize, well, logistics are catching up and the pipes are clearing. Policy will add background noise, but fundamentals will still set the tempo. The critical label does, however, mark a philosophical shift. It acknowledges what the industrial world has quietly known. Silver is not a luxury metal. It is infrastructure. Every solar panel, every circuit board, every electrical vehicle depends on it. And that dependence is why deficits have persisted and why inventories have been falling. Silver's price may rise and fall, but it's its strategic role in technology that is now officially recognised, and that recognition may ultimately invite more capital into an already tight market. Investors should treat this as both caution and catalyst. A government that decides silver is critical might one day decide that it perhaps wants a bit more control, but that same declaration also highlights what silver investors have known all along: that the world cannot decarbonize, it can't digitize or decentralize without it. Policy may interfere at the edges, but it cannot suppress physics. The silver story has always mirrored the world's contradictions. It is monetary, yet industrial. It's scarce, yet abundant. Ancient, but essential to the digital age. The new designation captures that duality, but it also kind of misunderstands it. Governments crave control and markets crave freedom. Silver sits uneasily between the two. Its elevation to critical status says as much about political anxiety as it does about geological reality. From an investor's standpoint, the takeaway is simple. Do not mistake symbolism for scarcity, but do not dismiss it either. The critical label adds a layer of narrative, not some new deposit. It may enhance interest, but it does not erase the need to understand supply, demand, and custody. If anything, it underscores the importance of holding physical, allocated silver, because the metal cannot be caught in the policy crossfire. Silver's repricing over the past year has not been caused by forms or filings. It has been driven by industrial expansion, investment demand, and the gradual recognition that tangible assets anchor trust. The designation will not reverse that. It may well accelerate it. The state has finally noticed what savers and engineers already knew. So, what does the addition of silver to the US critical minerals list actually mean? Well, it means that Washington has admitted that the metal at the heart of solar panels, smartphone, and bullion bars is too important to ignore. It means that the next time supply chains tighten, there will be new political actors on stage and new policy tools in play. It also means that the world's most undervalued essential metal has just gained official recognition, and that attention, however clumsy, could catalyze fresh investment. For thoughtful investors, this is not a warning sign, more like some kind of weather vane, because silver's promotion to critical confirms what the market has been whispering for years. This metal is fundamental. It powers the green transition, it anchors industrial progress, and it still serves as monetary insurance. The wise investor will not chase the headline, they will accumulate the substance. If you would like to understand what that means for your own portfolio, how to balance gold and silver, how to hold them securely, and how to turn official attention into personal advantage, then book a free strategy call with the Gold Core team and tell them I sent you.